What's up, everyone? It's your boy Shotgun Gabe, reminding you guys that if I can do it, you can do it. Today we're talking about ASXC, and I'm going to tell you my 3 strategies that I like playing this stock with. So stay tuned. If you haven't subscribed, go ahead and do so now. Let's get into the video. All right, everyone. I want to go over my 3 favorite strategies to play this stock. And grab your coffee, get your ugly chair, and let's get into it. Shout out real quick to everybody wearing orange ribbons this month. Our prayers and warm thoughts are with you guys. Man, they need to I wish they would keep every color focused on month, because there's so many different things that we want to make people aware of, and so many different colors so every month. So I think I'm going to start breaking it up instead of keeping one color for 1 month. But anyways, shout out to you guys. We hope the best for you guys. Now let's get into this. So, ASXC. I love this stock. I've been in it for a while now, and we all know they just changed their name. But I have high hopes for this company. I have high hopes for this stock. So, the first one I'm going to go into is called Buying the Dip. And then we'll look at it on the screen right now afterwards, and I'll show you what I'm talking about. Explain it more. But Buying the Dip is just, every time you see this thing drop significantly, I'm going to buy it. So, if it goes down, I'll buy a few shares. If it goes down some more, I'll buy a few shares. And what I do is, when I buy a share of something, it'll say my position, right? So every time it goes below my position and it's red on my chart, I'll buy more. And then once it's green, I'll sell off some, you know? And I like a big gap. I don't want to sell it when it's 3 cents up or 5 cents up. But when it starts getting close to 10%, I like to sell it to 10%. So if it says I'm up 10%, then I'll start selling off a few at a time. And I always buy a few or sell a few at a time. I don't throw all my money in at once, because if it drops and it's at $3 and it drops to $2.50 and I throw all my money in and then it drops to $2, that's another opportunity for me to buy cheaper and load up on more stock at a cheaper price, right? So why am I going to throw all my money in at once? I don't. When it goes above it and it starts selling like I was doing with AMC today, I don't sell all at once either, because it can go higher and I can lose more money, right? So I'll sell a few shares, lock in a profit. It'll keep going up. I'll sell a few more shares. And then if it starts going back down, but I'm still positive on that stock, I'm not going to want to buy any more shares. So I sell it a few at a time, try to time it to where it's at its peak. But, you know, you can't always time the market. So I sell a little bit at a time. Let's look at the chart and I'll explain. Buying the dip. So once this opened today and I see the RSI was going low, I'm going to watch this as it falls. And then once the RSI gets to oversold right here, I'm going to want to buy. And then once this starts shooting back up, I'm going to just hang out and watch it. And then I can see the RSI dropping again, and I can see the red candles forming. And once it starts getting close to this area, that's when I want to buy more. I'm buying each dip, but I'm paying attention to the RSI. You got to pay attention to everything. Pay attention to the candles. Pay attention to these guys right here, input and output, the volume, the RSI, all of that, right? And these all work together. So I know, as I can see this line right here, these indicators all tell me that it's going up along that line. This one, and this one. So that's buying the dip. I'm going to buy more, because if I'm buying, I'm going to be paying more. If I wait till it's back down here, I could buy at a cheaper rate. I'll have more. And as we know, if it goes up $1 and we have 1 stock, we make $1. If we have 10 stocks and it goes up $1, we make $10. So the cheaper I buy this at gives me the ability to spend more money on having more stocks instead of buying them at a higher price. I buy them cheaper. I'm able to buy a little bit more than I normally would. And I just ride this up and I relax through all this. And then once it starts going down and this is getting closer to that oversold territory, I'll buy some more. And that's just buying the dip. We're always going to want to buy low. And even if I'm selling, what I'll do is, ooh, this is looking really good. I will keep a couple of them. I'll keep at least one. So if I say I want to sell them, like, oh, this is looking really good. And I keep in mind, I also got a call option. So it expires on the 19th. If I say this is good and I want to take some profits, I'll sell all of them a little bit at a time, sell some here. It keeps going up here, and I'll sell some here. And if it keeps going up, I want a few more to sell at an even higher price, right? So I sell little by little. Then I can see I have one stock still and it'll be green. It'll be green for a day, an hour, however long it's green. And then one day I'll wake up and it'll be red. And first thing I do when I wake up is I go through all my stocks, and every one that is red, I add money to. Because not only am I averaging my position down, but I'm also getting more of these stocks. That way when it goes up, I'll make more. Because if I sell my stocks at top and I keep one of them and it drops $1, well, I just lost $1 because I sold my other 100 stocks or 10 stocks or 50 stocks or how many I have. So say I have 10 and I sell 9 of them and it drops $1. Well, instead of losing $10 because I sold 9 up here, I lose $1. And then once I see it's red and I wake up one morning, I'm like, ooh, it's on sale. And I buy another 10 or I buy another 20. And then I watch it throughout the day. And if it goes lower and it drops another 50 cents, I'll buy a few more, lowering my position on stocking up. And then one day it shoots back up $1 and I'm like, hey, I just made 20 bucks because it went up $1 and I bought 20 shares. I want to stack up on shares while it's cheaper, because if I buy 20 shares down here, I make 20 every time it goes up, right? 20 cents, 20 whatever, $20 depending on how it's moving. So I want multipliers down here. I get to buy multipliers. So I buy 20, I buy 50. Every time it goes up here, I make 50 times however much it moves up, right? That's how multipliers work. That's how stocks work when we make more. So we're going to want to buy more down here. And as it goes up, we make more money. And then we want to sell because when it drops, we lose less money. And then we get to buy again when it's cheaper. So every morning when I wake up, I go through my list and see which ones are red. And whichever ones are red, I add money to. And when they're all green, I wait till it's 10% above what I bought it at. And once I got a 10% profit in there, I start selling.
The second one is called the double up. And if you guys haven't watched my video on that, you can check it out here. So what the double up is you buy, you set a take profit order, and you set a stop loss. I like to use the trailing stop loss, but say a stock's at $10. So if I set my take profit order, which means that once it reaches this price, you're going to sell the stock automatically. You don't have to do nothing. It's automated. So if it's $10 and I set the take profit order for $12, then I'm going to set the stop loss at $9 or the trailing stop $1 behind. So for every trade that I do and I let it sit there and it does it automatically, I'm always going to make twice as much as I lose. And this will give me the ability to lose more trades but still come out on top. And once again, I said I'd explained it in this other video, my double up video. So if you haven't seen that, watch that here. But I can win 4 trades out of 10 of them, lose the other 6, and still come out on top. So if you haven't seen that video, please go ahead and watch it. It gets into more detail. But the double up is a wonderful play, especially when it's there's a lot of volatility in the market. If you're not sure, if you're not catching it in an uptrend, or it starts to go up, but you're afraid it might fall. And that's another good play to use the trailing stop loss instead of a regular stop loss at. So if you haven't checked it out, check it out. And we'll get into that. Let's look at it in the chart so I can explain it real quick.
Okay, guys, let's use SNDL for the double up strategy, right? So this is the double up strategy just to show you guys. And I was hoping this would get to 150, but what we'll do is I'll put a limit order. I'll get a quantity of 1. It's dropping, so I want to buy it at 120, say. I want to buy it if it gets to 120 because I'm going to cancel this out after the demonstration. So I'll put a limit order to buy at 120. I'll put a stop loss order at, let's do 110. If it ever gets to 110, I want to sell this. All right? So if I'm going to sell it at a 10-cent loss, then I'm going to want to profit at a 20 cents gain. So I'd want to sell at 140. And we can execute this order real quick. Uh-oh, everyone close your eyes. Don't look at my password. And then we'll place order. And then this just automates everything so that once the price gets here, I buy. And if it gets up here, I sell. Or if it drops up here, I sell. So the double up strategy. So if I lose 8% off the trade, I'd gain 16, right? So this is the double up. Lose 8, gain 16. And the margins would be tighter. I just spread them out. That way I didn't buy in and sell or, do a trade real quick because I don't want to use a day trade for this demonstration. But I'm just showing you, So if I bought, like, normally how I do this is if it was a quick day trade, I'd buy 100 shares at $1.41 or $1.40. And then I'd sell at 150. Or I'd sell at 135, And so I could either make a quick buck or lose a quick buck. And that's how you want to do it. And you can see if I did this down here and it gained up and I put a trailing stop loss instead, it would have followed it up all this way. And I bought 100 shares real quick. And then once it went down $1 or 10% or whatever I want, it would cancel it out. It would sell it and I'd sell at a profit. So I suggest if you use this strategy, use a trailing stop. But this is just a stop loss order to sell. So you buy here, and if it goes up and you make a quick profit, it'll sell automatically. And then if it drops real quick, but you always make double what you lose. So I can do 10 trades, and after 10 trades, I can only win 4 of them, but still profit. And once again, if you guys haven't seen my video, go ahead and check that out. That explains it in more detail.
So the third one I'm going to talk about is buying a stock and then buying a put. How does this work? Well, think about it. A while back, I had a stock that was shooting up like crazy, and it was just skyrocketing. And I'm like, oh, this is good, this is good, this is good, but it's going to pull back. I know it's going to pull back today. I know it's going to pull back today. And I was like, I want to keep this long term, but I think it's going to pull back several dollars at least. And it kept going up and kept going up and kept going up. So what I did is I went over and I bought a put. And right when it got to where it would stop going up by dollars, and it was stuck in between $1 and another, so it was like at 50, 60, 50, 60, 50, 60, 65, 50. I bought a put, and then the stock went tumbling down. Well, I wasn't tempted to sell my stock because I knew I had a put that I was going to cash out on, right? So if you want to keep a stock and this is a long-term play, but you're like, man, I want to cash out, I want to take some profit, but I want to keep some of the shares, and you're like, my goal is to add to this stock and buy more shares of it, slowly but surely, but it's going up a lot right now and I can make quick money off this. Buying a put is what I like to do. And that gives me the ability to just watch it and say, hey, whichever way it goes, I'm making money. So if it keeps going up, I'm still going to be making money and I'm laughing. And if it starts going down, I'm going to keep making money. So put gives me the ability to make money either direction where the stock's going. And they have more advanced strategies. They have straddles, and they have that's just for a whole nother video. That's not what I want to get into right here. But think about it. If you're going to keep this stock long term and you really like it, but it shoots up one day and you're like, man, I can make some quick money off this. What I do is I go in there and I buy a put. And then when it goes down later on, I'm like, all right, cool. And then if it keeps going up, I'm still making money off the stocks, And what I usually do is I won't spend a bunch of money and buy a bunch of puts, but I'll buy one, And that way, if I lose it and it keeps going up, the money I'm making off of holding the stocks is worth more than the put. And I like to say what I do because I'm not a financial advisor. I don't tell you guys how to play your money because it's risky. And I'm not going to say, hey, do this, and then you lose your money, and then you come over here like, man, I listened to Shotgun, and he made me lose a bunch of money. So these are the strategies I use, and they work for me. And if you watch my videos and you listen, some of it makes sense. If you're new to the stock market, some of this stuff may not be in your best interest to start playing with yet. Just buy a stock and hold if you're new. And this is a channel aimed at beginners. So that's why I say this is what I do. And I want you guys to learn from me and what's working for me and use it in your own way and do your own research and use these techniques in your own stock, right? ASXC is a wonderful stock. I'm going to hold it on for the long run. I do have some. So if you think it's a good decision to buy some, buy some. I see this thing making me some much money in the long run. It can make you some money in the long run too. Let's check out the chart one more time and I'll end the video.
Okay, so if we see that we have a stock that's running up really well, and I want to do the buying a stock and a put. So I bought these stocks. I have 15 of them, and I paid $1.24 for each one. And as this goes up, I'm continuously making more money, right? But say it runs up pretty good like it is right now, and I'm going to want to sell off because it's getting high. I'm like, well, I can make a quick buck off this. But I see this as a long-term play, and $1.40 in a few years, I don't think this is going to be $1.40. In a few years, I think this is going to be a lot higher.
So I want to make a quick buck off of it. If I go down to the puts, and I can see the stock price is at 140, 139, 140, and the next option is right here at 150. I can wait for this to go past 150, or I can buy it down, right? Because eventually, short-term sellers are going to trade this in. It's going to go back down a little bit. So if this gets past 150, I'll buy this at a cheaper price. And then once it drops back down, I can make a quick buck off of it while keeping all my stocks. But I'm going to be paying attention to the RSI, the VWAP, and stuff like that, correct? Because this down here tells me that people are buying. This tells me people are selling, right? Input and output and the RSI. So this is being sold. This is being overbought. Right now, this is all overbought territory. So once this turns red and this starts looking like it's going to go down, I'm going to want to buy a put option real quick. And that makes me a quick profit while keeping my stock. So I'm hoping this goes over 150 so I can buy it cheaper.
Thanks everyone for watching. I appreciate it. Please like and subscribe if you like the content so you guys can get more. I guess if you hit that notification bell down there, it will notify you whenever I put out videos. And if you guys are beginners, hey, we're all learning this together. So just use your mind, think about what you're doing. Take your time. There's always another trade and there's always another gain to make. And everyone, please have a good day.